Hello, traders. It's 8:02 a.m. on Thursday, the 6th of December, 2018, coming at you from Chicago. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. You may have noticed that my voice sounds like Barry White's. It's because I'm under the weather, but I shall not miss this day. Um, Overall, clearly risk off. This morning we had quite a tremendous move down overnight. On the open, the market was hit. The volume scope or the footprint on that just looks like no bids were lifted at all. Um, to the point that the CME actually from the open uh, was was halting trading for 10 seconds every 10 seconds for the first 2 minutes and 40 seconds. Um, and so it looks like a fat finger. There was some talk of a fat finger by a fund while the market was really thin on the open, a sell at market order that just obliterated the market. But as the story develops, of course, we start to get more and more information. And not that it matters for us really, but it's good to know. It's good to know what the basis is. Is this an error? Is this something that's sustainable? And it looks like it's something that's sustainable. This has to do with the arrest of Hugh Wise, CFO, who's a very well connected figure. The arrest was made in Canada. Those Canadians. Um, and the Chinese embassy was all up in arms yesterday and had warned that there would be dire consequences. And the Chinese government is demanding the release of this person. Um, and so it's what this is doing potentially to the market is it's creating another a big obstacle for this trade agreement. So basically, what we've done is we have repriced back to, and I'll go over this in a minute, back to where the agreement was in doubt in the balance area. We're back into the area where we're balancing on the way down, and so this is where we have to take the story from. There's going to be a pretty large gap, 40 some odd points from here. And this is after selling on Wednesday. So it's not looking so hot for the buyers, even if the new situation improves. So that whole thing with Powell, Fed Chair Powell, and the Fed getting close to neutral, and then the G20 meeting and the gap on Sunday night. All of that has been taken back. We're back at the SOC of all of that, and we're back in balance. This looks like a failed bounce by the market. Looking ahead today, so that's what's potentially driving things, and then on top of that, we have the OPEC meeting um, in Vienna with the talk of production cuts. There's been no decision yet. Anything below 1 million barrels per day of cuts is bearish by the market, is seen as bearish by the market. And OPEC's trying to get non-OPEC countries to participate in the cut as well. So that's in play. So we'll see, how this Canada versus China and U.S. versus China thing works out. Okay, looking ahead at today, we have quite a bit on deck. Uh, we have PMI services at 9:45 Eastern, ISM non-manufacturing at 10. We have factory orders at 10. Factory orders at 11. We have durable goods at 11. We have gasoline, crude, and distillate inventories at 12 Eastern. There's just a fair amount on the calendar now that we're catching up after the day off yesterday. There are also several Fed speakers, Fed's Bostic at 12:15 and Fed Speaker Williams at 6:30 in the evening US Eastern US time. And we have Fed Speaker Powell at 6:45. Powell. So that's where we stand. Where did we leave things on Wednesday? Again, you'll have to excuse my voice. Um, Wednesday, the primary idea was we would likely push into 27. Remember the 2790? It seems like so far ago. 2790. The bias was firmly down. In fact, some of you commented on it in chat. I was looking for 2790, 2794 would be ideal. For failure by buyers to lift beyond 94, this is a big area, 94.75. For sellers to come in with an impulse down, I was expecting the low to be taken out, and for this to actually close the gap and meet with 27.58.75, the point of control, and potentially 27.54. So sell, 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 sell. That's the plan for Wednesday. The alternative is that we do pop, go sideways, sell off, and then come back into the range and hold for a 2-day balance. That didn't work out at all. Here's what actually happened. It's such a noisy chart because there's a lot. Look at that. For Fortic Renko to be so noisy. So what we did was we opened up, we pushed, we opened up, we pushed to 87.75. Oh, what's going on here? Where's what is going on? Hang on. There we go. We pushed up to 27.87.75. Couldn't get to the 90 here, right? And it breaks the OS low. We first broke the OS high by a little bit. In fact, to see this, I need to really change things around a little bit. But it's important to see this. I would really like it if everyone would just go to whatever trigger chart they use, whatever you use to actually see your setup or whatever you trigger off of, and to replay this. But you see it gets to 27.87, never gets to 27.90 or 94. That's what scenario one is for. And then we get this push down. Okay, we take out the prior day's low, and then from there it's really sell, 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 sell. We fill the gap at 27.64.75, and we get to scenario one's key target right here. Boom, the point of control. We expect it to bounce around 27.58.75. No such luck. It just rams right through and pushes right into the next area down. The fills in this double distribution area that we left behind from way back, right down here at 20. So the next target, the next area to watch out for, once it breaks through, is 27.17.50. 27.17.50 starts is the top of the string of singles from the Fed's Powell's talk. 27.17.50 is very important for buyers to hold because beneath it is a basically open air down to 26.98. And so once we get into 27.17, I warned the folks at Convergent that this is not an area you'd want to get long beneath. And if you do, it needs to be a scalp. And it just pushes right through into 27.02. 27.02, we get the bounce back to 27.31. And then the continuation, we end up halting right at this area right here at the bottom of the singles. So we end up with a low of about 26.97 and a quarter. So it pushes through that 98 area by eight or nine ticks or something, and then we end up holding at the low. This is clearly a trend day profile. We have the point of control at the lower quartile of the range. We expect the next day to push us lower. Of course, the next day is a holiday, and we end up trading till 9:30 Eastern before the market shuts down to commemorate President Bush's passing. And now what we have is a gap down with current trading taking place at 26.56. We've been bouncing between 68 and 50 for some time after the initial drop. Pretty violent move overnight. We're opening in a gap, but overall we're also opening in this big. Remember this consolidation area here, right in the middle of it. Look at where the overnight point of control is. The overnight point of control is right here. The point of control of this entire area is right in that area, 64.50 versus the overnight point of control of 63. So we are back in balance here, and it does not look good for longs, for longer term players who are long, um, and for put sellers. This is not an ideal situation here. So that's what we have today. It looks like it'll likely be a choppy open. Let's look at the overnight. Overnight. Here's the overnight. We open up here at 27.13. Um, this here is Wednesday evening U.S. time to Wednesday morning, a partial day, and then this is where we opened last night, and then we immediately go into this strong selling. Notice the delta is just not really into it, right? So we get this big move. We dropped about 60 points on negative 4,000 delta. It was just a very, very thin market. That's why it looked like a fat finger. And then we push through, we bounce up, we pull back. Where do we pull back to? We pull back to the mid, right? The overnight session pulls back to the mid. We had a consolidation for some time. The Europeans come in. The Europeans come in right here. Buy, 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 and then they let go, and then we end up with uh, a low which is higher than the initial low. The initial low is 26.4975, and then just now we got tangled up in VWAP and are holding steady. So what we have here is a market that's just trying to stabilize in a very wide range. You can see that the distribution looks almost Gaussian, almost well distributed, but it's still seeking out prices. The point of control is not really a very clear point of control. So um, a lot of volume, 524,000 contracts, almost 5 times the normal volume have traded as people quickly adjust their positions. But that's where we are in the overnight. Before we move on, a quick view of what we've done. What have we done? What are we trying to do? How good of a job? Those are important questions for the narrative. And here we are in the balancing phase. Here we are taking off on Powell, and then we start to do this one-time framing up. We gap up on G20, and then we sell immediately on G20, sell off. Sell off. We end up with a very weak low on Tuesday, and then now we're down in this point of control area. So what we've done is we've pushed, pull, lower low, make a test this important pivot point here, another higher low. We made an attempt at this high again. I drew this trend line. The trend line actually when we were up here was at 28.1450. Couldn't quite get there, and now we are approaching this lower trend line, and we're forming basically a triangle. And so we are, you know, we are struggling with finding, finding a, a reason to continue to push. Um, this low in the overnight session is just above this trend line here. And so I believe that if we get below this, if we push and hold below 2650, we're looking at 2600, 2605 again, 2603. And then from there, really the 2500s, we're looking at 2535. So it's not really boding well for the longs, as I said. Okay, that's a lot to cover. Let's take a look at what we have for today. Remember where we are in the narrative, right? So remember where we are in terms of what have we come back to, and what are we trying to accomplish here. So overall, sellers have the ball. We have a gap, huge gap down. We are in balance, so we have to keep an eye on the fact that we are balancing out against this consolidation area here. So this is the last frontier for buyers. I expect an open auction out of range. I expect it to be quite wide. I expect that you'll have to increase your stop size, increase your targets commensurately so that your R factor or your risk factors remain steady. So I'm looking at probably 4.5 to 6 points of room on trading today. The depth looks a little wonky this morning, double digit, and really a lot of flash, a lot of algorithmic stuff in there. So overall, this is a high risk area, a high risk kind of day. The volatility, the VIX is likely to shoot up, and I would recommend that anybody who's got less than a full margin for the future that you're trading, if your account size is less than full margin, you're counting on day trading margin to take advantage of this volatility, I say you're probably playing Russian roulette with your account, and the results are not likely to be good for you. So if you are, right now the full initial margin for the ES is around $6,600. If your account size is less than $6,600, you would be smart to do one of two things. Maybe one of three things. One, don't trade. Um, don't trade at all. Just sit and watch. Do your homework. Do something with the market. Two, try to trade it with a simulator, taking the same setups while expanding your stops and targets, so that you can get a feel for what it's like to trade in volatility. Three, of course, fund your account with more money. But again, if this is not an environment that you're used to, you'll just end up losing that money anyway. So this morning I'm looking for pretty strong two-way rotations. I'm expecting the market to make an attempt at being responsive. I'm looking for the door to close on this in the overnight VWAP and mid area, which is 67. Where's my mid? 67 and 82. So if anything, it might push to somewhere in between 72 or so. And then I'm looking for sellers to hop right back in and take this down and start making this, if you're somebody who's been waiting to sell, this is a pretty high confidence move here to sell any pops. So, oops, why did I write two? I'm not even medicated, despite the fact that I'm not feeling well. All right, let's do that again. Open auction, wide swings. I'm looking for this to be responsive into this 72 area, 72, 76. I'm looking for an impulse down, and then for the market to start walking itself down through the overnight low into and towards. I'm not saying we'll get to 2603 today, but I wouldn't put it past them. Okay, that's scenario one. Scenario two, we get an open test, drive down, consolidate, push, consolidate, push, and we start to basically drive immediately lower. This is the scenario that I would not like, but Very panicky market overnight, not able to recover at all. If this was a fat finger, it would have recovered more than 50%. It's not able to take back 50%. It's not able to take back VWAP, despite the European session. Not a good sign for those who are looking for it to come back. The tertiary plan is an open auction that tests lower, is unable underneath the overnight low, finds its bidders, and then starts to work its way back. And my expectation is this isn't going to get past, this is not likely to get past 2684 or so, leaving us with a gap zone, even if it does start to recover. I don't see I don't see good news out there. I don't see that this has got something that somebody can step in and say, "Oh, we uh, we found a deal with China or something." I see just a lot of ominous stuff that the market has to factor in. The market abhors risk as it does a vacuum, and we're in a vacuum on higher risk given the events of the last day or so. So sellers are likely to gain more territory. Don't be stupid today. Watch your risk. I mean, I can't emphasize that enough. This is the kind of day that's going to pull in your emotions. Emotions cannot be denied, but emotions do not need to be acted on. As a professional trader, you cannot act on your emotions. You need to just let them fly by and still follow your plan. This is a good day to take a lot of breaks. It's a good day to watch for the first 20 minutes, 30 minutes again. Let the crazies kind of kick in and adjust their positions, the OTF, and then start to look for areas. By the way, that third plan for you with a small account is probably to just trade over the lunch hours, the chop hours, the lunch hours, and so on when things slow down a little bit. That was the third plan, not to fund your account. I'd hate for you to fund your account in high volatility. Anyway, good luck today, and I'll catch you tomorrow. Take care.